All right, let's get right into it. We're tackling one of the biggest questions in global finance today. Is the US dollar's long, powerful reign over the world's economy finally coming to an end? You've probably heard this term de-dollarization thrown around a lot. So what's really going on? Let's break down the facts.
You know, to really get this, you have to hear this quote from way back in 1971. The U.S. Treasury Secretary John Connally flat out told a group of European finance ministers, "It's our dollar, but your problem." I mean, wow. That one line just perfectly nails the incredible power and, yeah, the controversy that comes with the dollar's dominance. It's a power that literally affects every single country on the planet.
So, before we can understand why some countries are trying to bail on the dollar, we first have to ask, how did it become the undisputed king of the hill in the first place?
Look, the dollar's rise to the top was no accident. It was built piece by piece over decades. It all kicked off in 1944 with the Bretton Woods Agreement, which basically pegged the dollar to gold and then pegged every other currency to the dollar. Simple enough. Then, in '71, the U.S. severed that link to gold. You'd think that would be a problem, but the dollar was so entrenched, its dominance just kept rolling, which set the stage for the next brilliant move, the petrodollar system of the 1970s.
The petrodollar system was, honestly, genius. The deal was simple. The world's biggest oil producers agreed they would only sell their oil for US dollars. Now think about that. That meant any country that needed to buy oil, which, let's be real, was pretty much every country, had to get their hands on US dollars first. This created this massive, non-stop global demand for the currency, locking it in at the top spot.
You see, for any currency to be the top dog, it has to do three jobs, and it has to do them really, really well. It needs to be the world's price tag, the main tool for buying and selling stuff across borders, and a super safe piggy bank for other countries to stash their savings. And for a very long time, the dollar has been the undefeated champ in all three.
Okay, so that's the backstory. But lately, things are starting to change. The king's grip seems to be loosening a bit. And it's not just talk anymore. A growing number of countries are actively looking for and even building their own alternatives.
So why the sudden pushback? Well, it boils down to two huge reasons. First, what people call the weaponization of the dollar. When the U.S. imposes financial sanctions, it can effectively kick a country out of the global financial system. That has made nations like Russia and China sit up and realize, whoa, we are way too vulnerable to U.S. policy. And second, people are getting a little nervous about the U.S. economy itself, especially the huge and growing mountain of public debt.
Okay, so we get the why, but what about the how? I mean, how are countries actually doing this? The proof isn't always in some splashy news headline. Now, you find it in the quiet, careful moves being made by the world's central banks. Let's take a look at the data.
If you check out the foreign currency reserves, basically the savings accounts of central banks, the trend is pretty clear. The dollar's piece of the pie has been slowly but surely shrinking. It's dropped from about 66% back in 2015 to just over 56% today. Now, that's not a collapse, not by a long shot, but it is a very real drift away. So if they're holding fewer dollars, what are they buying instead? Well, a whole lot of gold. It's pretty stunning, actually. Since 2022, central banks have more than doubled their average annual gold purchases. They're shifting their cash into an asset that's timeless and, maybe most importantly, politically neutral. And that move is a direct challenge to the dollar's role as the world's go-to store of value.
Okay, so if the dollar's job as the world's safe haven is being questioned, what could possibly replace it? Are there any serious contenders out there ready to snatch the crown?
When you get right down to it, there are really only two major players in the running right now, the euro and the Chinese renminbi. I mean, both of them represent absolutely massive economies, but, and this is a really big but, they each have a major Achilles heel. The Eurozone doesn't have a single unified government bond market like the US Treasury market, which makes it less deep and liquid. And the renminbi? Well, it isn't fully convertible. The Chinese government still keeps a tight grip on it.
Now, China's strategy here is patient. They are absolutely playing the long game. They're setting up currency swap lines all over the world to make it easier for other countries to get renminbi. They've built their own global payment system called SIPS to compete with SWIFT, and they're pushing hard to create a Petro-Yuan to challenge the dollar in the oil markets. They're building a parallel universe, step by step. So, you've got these clear challenges. You've got active contenders. But hold on. Despite all this talk, any reports of the dollar's death are, as they say, greatly exaggerated. Let's look at the other side of this coin for a minute.
This one number is just mind-blowing. 88%.
According to the Bank for International Settlements, for nearly 9 out of every 10 currency trades on the entire planet, the US dollar is on one side of that deal. That just shows you its unbelievable iron grip as the world's medium of exchange. Nothing else even comes remotely close.
And that dominance isn't just in trading, it's in actual payments too. The data from SWIFT, the system that handles most international bank transfers, shows the dollar's share has actually grown over the last decade. It's up to 47%. And check this out. Most of that share was taken from the euro, its supposed main rival. The renminbi, with all the hype, is still sitting at less than 5%.
And this gets us to the most important point of all. You have to separate the dollar's different jobs. So yes, its role as a long-term store of value is absolutely being challenged by things like gold. But for the day-to-day, minute-by-minute work of the global economy, as a medium of exchange and a unit of account, its position isn't just strong, it's arguably stronger than ever.
So what's the verdict here? We've got data pulling us in two different directions. What does this all mean for the future of the dollar and for the rest of us?
The clearest way to think about it is this. What we're seeing is a gradual evolution, not some sudden revolution. An overnight collapse of the dollar, it's just incredibly unlikely. There is simply no other currency out there that's ready to handle the sheer scale, the deep markets, and the institutional trust that backs the dollar. But is a slow, steady shift towards a world with several important currencies, a more multipolar system happening? For sure, it's already underway.
So, no, the dollar's kingdom isn't collapsing, but its borders are definitely shrinking, and new powers are rising. This change isn't going to happen tomorrow, but it is going to fundamentally reshape global finance and power for decades to come. So the real question isn't if the dollar will be replaced, but what this new, more complicated financial world is going to look like.